Good afternoon, YouTubers. Now, anybody who knows anything about the stock market will tell you the old adage: buy low, sell high. What they just mean by this basically is, if you buy a stock at £10 and you sell at 15, simple maths, you've made your £5, you've bought low at £10, sold at 15, selling high, you've made your £5. Bob's your uncle. Now, today I'm here to tell you, you can buy high and sell low and still make your money. And I've not lost my mind. What I'm talking about is what I promised that I'll talk about in my last video. Today we'll talk about spread betting. Okay, what is spread betting? Let's consult our friend the internet, who tells us that spread betting is any various types of wagering on the outcome of an event where the payoff is based on the accuracy of the wager. Okay, I'll repeat that statement. Spread betting is any various types of wagering on the outcome of an event where the payoff is based on the accuracy of the wager. Okay, so I'll break that down and simplify it for you. Basically what they mean is, in stocks, you can make money, you make money from buying the stocks when they're low and selling them high. But in spread betting, you can make money from stocks, buying stocks when they're at their low price and selling them when they're high. And inversely, you can make money from buying stocks at a high price and selling them low. Okay? So, what am I talking about? Okay, under spread betting, so let's say Tesco. One share in Tesco costs £10. Under spread betting, you don't own this stock. You never own the stocks. But you're betting like a gambler, saying either the share price of Tesco is going to go up or go down. And that's how you make your money. So, the Tesco I was talking about, the Tesco share price is £10. And you know that Tesco, in this pandemic, they're going to sell lots of food or lots of tissue paper, and you're going to wager your money. So let's say, to make it simple, each movement, you say you're going to wager that each movement is going to be maybe equivalent to £1. So let's call them points. So you wager that Tesco is going to increase by okay. So Tesco is £10, and you wager that each point is going to be worth £1. Okay? So if Tesco goes up 5 points and you've wagered that it's £1, each time it moves is £1. So it's going to be 5 points times the £1. Are you following me? So each point is worth £1, and Tesco goes up 5 points, £15. So it's come from 10 to 15. You've made your 5 points, which is, each point is equivalent to £1. So £15. So you've made your 15, just like in the previous example of the shares. Now inversely, Tesco might lose by 5 points. So instead of going up 5 points, it goes down 5 points. And the same is true. So for each point, is £1. So if it goes down 5 points, instead of making £5, you're going to lose £5. So basically, spread betting is like shares on steroids. So there's this thing they call wagering, of which I'm not going to go into. It's too complicated. But to keep it simple for everyday people so you can understand, it's just your wagering is going to go up by whatever points. So like the example I gave, if you say each share is going to go up by £1, whatever it goes up, you make £1 times whatever amount it goes up. Or if it goes down, you make £1 times whatever shares it goes down. So in my example, I was saying Tesco has gone up 5 points. So if you had put £2, that means £2 times 5 points, £10. And if you had put £2 and it goes down, that's £2 times 5, which is £10. Right, so now you have a brief overview of what spread betting is. So you never own the asset, but you're just betting on either it goes up or it goes down. Now this is quite dangerous in that, so the examples I was given about Tesco, you have a certain pot of money that you're going to use to make these bets with. So in the Tesco example I was given, so let's say you have a pot of money, you put, so to go onto a spread betting forum or platform, you need to put a certain amount of money. So let's say you have £20. You take your £20, you go to IG, which is the platform that I use, and I'll leave a link at the bottom of this video of how you join IG, and I think if you join, I get some money, which is not a bad thing. So you go to IG, you have your £20, you put your money in. That's the first thing. You deposit your money into the platform. Right, and then you go to this Tesco thing that I'm talking about, and you put, okay, Tesco is going to go up by, you wager Tesco is going to go up by, I don't know, the points is going to go up or down, infinite. You just don't know. So you put your money, your £20 in there, and you wager that for £1 for each movement, either up or down. So you put your £20 there, you say it's going to go up. Oh yeah, I forgot him. So these movements up and down, I don't know why they call them this, but they call them this. I found it like that, and that's the jargon that they use. So they say you're either going to go long or you're going to go short. So if you're wagering that Tesco is going to go up, that's called going long. Or if you're wagering that Tesco is going to go down, that's called going short. Okay? So in this example, you wager Tesco is going to go up. It's going long, right? So you put your £20, and then let's say things go your way, and Tesco goes up by £1, goes up 10 points. So that's 10 points by £1. So that's £10. So you've put your £20, it goes up 10 points. Now you've made £10, and if you close your deal and you withdraw your money, you've put in £20, you've made £10, you've made 30. You're smiling. And the other way around, you put your £20, Tesco goes down by 10 points, You said each point is worth £1. You've lost £10. So you've put your £20 in, you've lost £10. You withdraw your money, you close the deal, you withdraw your money, you've lost £10, and you go home with a tenner in your pocket. Right, so here's the problem. So you've got your £20 and you've wagered £2 for each movement. So it goes up by 10 points times £2. You've put in £20. It's gone up by 10 points times 2. You've made another £20. You're smiling. It's all good. Now, if it goes the other way around, it's gone down by 10 points times £2. That's £20. You've put in £20 and you've lost £20. Now, these spread betting people, these evil people, are not going to let you get away with it. So, this £20 you've put in, they will close you out. Whether you like it or not, they will close you out, and then they'll take your £20. And that's it. That's why people are scared of spread betting, because if it's going the positive way, whichever way you've bet is going, things are fine. But if it goes the opposite way, you're crying and they will close you out. Right, so how do these platforms make their money? How they make their money is there's this thing they call the spread. So there's a price that they'll put to buy the share. So let's say the share is maybe worth £10, but they'll put the little markup, so maybe £10, 2 pence. And that's the spread. That 2 pence is how they make their money. So it's worth £10, but they'll sell it to you for £10, 2 pence, and that's how they make the money. And I know you're saying to yourself, that's a small amount, but lots and lots of people do these deals in and out, and that's how they make their money, by the volumes of people coming in and out. Trust me, they make their money and it's worth their time. And also they have a daily fee that they might charge you depending on the platform. So this is like what I said, it's shares on steroids, and you really need to know what you're doing. So what I would advise is, by the way, this is not financial advice, it's what I do with my money. You decide what you do with your money for legal purposes. So it's up to you. So the first thing you want to do is, if you want to get into the spread betting, is open what I do. Okay, I'll tell you what I do. There's this app called Stock Spy that I use, and I check this app on a daily basis. And Stock Spy is basically telling me on a daily basis, are the stocks going up or are the stocks going down? So from the movements, volatility is your friend, especially when it comes to spread betting. Volatility just means the movements that the stocks have. So let's say stocks like Tesco, they're not volatile because they're big companies and they're in the FTSE 100. So they don't go up and down that much. They might go, typically for a company like Tesco, it might go up maybe 5 or 2%, like 5% up or 5% down on a daily basis. So it doesn't go up and down that much. So there's not much leeway, and you won't make that much money out of stocks like Tesco. So below the FTSE 100, there's a group of companies that are in the FTSE 250. So these are small companies that are unstable, so there's a lot of volatility. So when they say the companies are unstable, so let's say, give an example, Plus 500, which is another platform to invest your money. So Plus 500 on a daily basis can go up maybe 5 or 7%. So you see the difference with the Tesco. Tesco is stable. It will go up maybe 1 or 2%, but companies that are unstable will go up more, like 7 or 10% on a daily basis. And these are the companies that we want, because whatever points they're going up and down with, you are putting your money there, and the volatility is your friend. So you need to know whether a company has gone up or down on a daily basis, and you can only learn this by watching them on a daily basis and studying their movements. So you need to know, has this company gone up or gone down? Like, even when I open my stock spy, I know I can actually tell you this company has gone up or has gone down, because this is how you make your money. So let's say, like now with this US elections, of which I hope Trump lost. If you're a Trump supporter, that's your own business. I don't like him. Anyway, so this up and down volatility that I'm talking about, US stocks have actually been affected by this up and down movement of the stocks quite. So I'll give you one stock I'm invested in, Groupon. Groupon went down in price when it started. I think it went down by 18%. This Friday went down by 18%. So Friday was the 6th, yeah. Went down by, I think it was 12 or 14%. And I actually made money, because I knew, no, Groupon doesn't usually go down by this price, and I put my money on Groupon to say it'll go back up. And I actually made easy £200. Easy, just like that. So, like I said, to reiterate everything that I've been saying, so you can make money from stocks going down, you can make money from stocks going up. But you need to have a significant pot of money so you don't get closed out. I know some of the things I'm talking about may seem like gibberish, but if you want any more clarification, just send me a message in the video and I'll clarify. I'll put a link to IG, that's the platform that I use. I'll put a link for the Stock Spy, that's the app that I use to check on the prices of the stocks. And hopefully you take my advice and we'll make money together. And next video I'll be talking about pensions. I know it sounds like boring stuff, but trust me, you have no idea. Pensions are very, very important, and I'll discuss them in the next video. So subscribe, and you won't miss any more videos that I'm making. And if you have any tips or things you need clarification, you know what to do. And stay safe, and I hope that you're well out there. All right, take care.